However you look at it, the federal debts that we've created has grown past critical mass. The only way to pay the debts now is by taking on more debt. Last video I showed you guys about the rising bankruptcies, our nation's woeful trade deficit, the government's absolutely unbridled monetary creation, and our comically extreme levels of debt. There's a lot of reasons to be cautious right now, a lot of reasons to think risk off, a lot of reasons to be afraid financially. This video is about helping you navigate this, understand it, and land on your feet, help the people you care about. But I was working on this big article for my newsletter subscribers, talking about all the different risk points, just to consider. And the article's not intended to say that this is all going to happen. It's intended to say that some of these things might happen, and you need to be aware of them and be ready for them in case they do. Think upstream, prepare yourself for eventualities, and hope they don't happen. So here's a lot of the risk points I'm putting together for the article. I thought I'd do a quick video review of it as I'm doing it, and newsletter subscribers will get the full report after we're done filming this video.
One risk above all others.
This is risk point number 1, war, and I intentionally am not going to say a lot about this. You guys know what the situation is, you know what's going on, and you know how I feel about it. As it stands right now, we are in a de facto proxy war with two different nations at the same time, Iran and Russia.
Is the election a risk point?
I put election as a risk point. You might say, how can the election be a risk issue or something we have to be worried about? It depends. That's the point. You don't know.
The Great American Debt Bomb?
Now, this debt crisis is a big one, and this is the one that if you have to choose one of these risk events that's going to be most concerning, that will absolutely blow up, this is the one. This debt crisis has only one way to go. We have $34.14 trillion in debt for the federal government. But the problem with debt is that it is almost always connected with the very concept of time itself. You might say, I'll lend you $100, but I want $120 back in a year from now. There's a time limit. There's no way around all the defaults that are going to be happening. A lot of debts will not be able to be paid. When you don't pay a debt, that's a default. When you pay only a part of what you owe, that's a default. When you don't pay what you owe on time, that's a default. And there's another way to default, through inflation, which is what the federal government is doing right now, literally right now. Liquidating the money, making more and more money, taking on more and more debt, making each dollar represent a little bit less of the GDP. But you need to remember that the party getting defaulted on is sometimes regular people that you know, innocent people, because a lot of companies with a few hundred employees, if they're having a good year, they might buy some bonds to invest their money somewhere safe, what they believe is to be safe. And if they need to have a new factory, they need to raise some money, they might issue bonds. But the point is, when bonds don't get paid, or debts don't get paid, that counterparty is going to take the hit. A lot of these are smaller companies operating in the economy right now that will be noticeable to you. If we run into a big tidal wave of defaults, there's going to be people you know that get affected directly. However you look at it, the federal debts that we've created has grown past critical mass. The only way to pay the debts now is by taking on more debt. You can't pay the debts with the money that we bring in through taxes. The only way to pay the money we owe to not default is to increase the amount of debt we have. That means that, just like we always talk about the zombie companies, it's almost like the United States of America is actually the zombie king. All this fiscal mismanagement shows up in a few ways. For example, there might be adjustments to federal services, also a possible currency crisis or stock market meltdown, bankruptcies among the banks, potential recession, maybe something worse. You tell me what you think is going to happen. Before we get into the currency crisis and the recession and all the rest that we're going to talk about in this video, I want to ask you to remember that this channel is about helping you navigate and thrive and understand through this economic downfall that we're going to be experiencing. And you can keep this conversation going so that we can help you. We can do all that for you if you just simply subscribe to the channel.
To defend the currency in a crisis.
I'm going to read you the important part of this definition of a currency crisis. resulting in a sharp depreciation or forcing the authorities to sell foreign exchange reserves and raise domestic interest rates to defend the currency. When you have a currency crisis, interest rates spike. As you've seen when Jerome Powell raises interest rates, how that affects you. All of that would be in play in a currency crisis when they try to defend the currency. If there's a sudden loss of confidence in the US dollar among everybody else around the world, other currencies will be comparatively more valuable in relation to the US dollar.
Comical monetary creation.
You and our group here are aware of what's going on with monetary creation. I show you guys charts of this all the time, and you know what it means, how it's going to affect various aspects of all of our lives. However, a lot of people are going to get completely blindsided when we go through this economic downfall. This all plays into the Great American Debt Bomb, the trade deficit, inflation rates, interest rates, and even confidence in the currency itself.
The rise of China's oil dollar.
Diminished use of the petrodollar. Ever so slowly, a little bit more oil is traded in currencies other than the US dollar. It used to be about 90% of oil all over the world traded in US dollars specifically, and that number is coming down a lot for a lot of reasons that we're about to talk about right now. This is from oilprice.com. A fifth of global oil trade used non-dollar currencies in 2023. Expect that number to continue to climb a little bit, even if it's 1% a year. It still represents billions of dollars in oil. This is from Forbes. A spate of recent deals raises chatter of a fading petrodollar. Here's some examples. Brazil and China, two members of the increasingly influential BRICS alliance, announced an agreement to conduct all future trade transactions using their own currencies. China ranks as Brazil's biggest trading partner. Reuters reported that Indian customers have paid for most Russian oil in non-dollar currencies. Another one here. French oil giant Total Energies announced it has completed its first purchase of liquefied natural gas from a Chinese company, using the Chinese yuan as currency. And the reason I'm telling you these examples is because these three were all in 1 month. And there's many more things each month happening. There's just more and more nations trading oil, not using the US dollar, which everyone used to do, and now some people still do. Some countries are using their own currencies or other currencies. The reason this matters is that it reduces the actual global demand for a certain currency. If all these countries all over the world have US dollars in their coffers and they don't need as many US dollars anymore, they release those into the wild. Those will eventually find their way back to our shores and stoke inflation here. This is one example of many of the things that are going to happen as we continually, although slowly, lose more and more usage of the petrodollar every day.
House of Bricks.
And since we are the petrodollar, most countries do need to use the US dollar, so we become the reserve currency of the world. But now you've got the BRICS nations coming up with a reserve currency of their own that's going to be backed by gold, making it a superior currency to the US dollar, I'm sorry to say. But in terms of the BRICS countries, 33% of the world lives either in Brazil, Russia, India, China, or South Africa. And they represent a cumulative GDP of $27.7 trillion, which is approximately a 26% share of all global GDP. And since then, the BRICS nations have added more countries to their collective group. And keep in mind with a lot of these countries, if they have a shared currency, they're very likely to stick together militarily. Just keep that in mind when you hear who else has joined the BRICS nations now. The most recent additions were Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the UAE.
The slippery slope of real estate.
In terms of real estate, we just saw the first decline as told by the Case-Shiller Home Price Index. And this is probably, in my opinion, the beginning of the move I've been telling you about for a while now. I believe house prices are going to come down pretty significantly. And it's got to start somewhere. I can't believe how long it took, but it will eventually play out exactly as I'm telling you it's going to play out.
The world of economic make-believe.
We are going to have a recession. But I'm realizing that maybe nothing matters anymore in the world of economic make-believe. You don't need to care about debts. You don't need to worry about the inbound recession. We don't have to make more money than we spend. I saw Daniel DiMartino Booth talking about that there may be possibility that the recession already began in Q4 last year. But whenever it gets here, there is a recession on the way right now. It's a day closer every day. It will get here eventually. When it gets here, it'll get here. But the reason an economy needs a recession, it's like the body. It needs autophagy. You got to get rid of all the dead cells. The recession gets rid of over leverage. If someone's bought too much house that they can't afford it, if a corporation's taken on too much debt, they're not operating efficiently, companies slow down, the numbers get ugly. Basically, you go from expansion, that's with too much, too often, too many, to all of a sudden bankruptcies, foreclosures, defaults, deleveraging.
Some of them absolutely will.
Now, I'm not saying that all these things are going to happen or that all these things should be a big economic concern. What I'm saying is that some of these things are going to be a big economic concern. That's why we're having this conversation right now. I'm helping you understand what's really going on because you're getting told a bunch of bull by the people in charge, the people in the media, people in the politics. We need to help you preserve and build and thrive. That's what we're doing here. But you need to get your own backyard cleaned up first. You know, when you're on an airplane, they say put on your own oxygen mask first and then help the kid. Same thing with your financial situation. You want to help somebody that you care about, you get your financial house in order. You build from a base, a good solid foundation, and then you can expand and reach out and help the people that you care about. And for us to help you do that, we need to keep this conversation going. The way you can help us out, you know what I'm going to ask you, so I'm not even going to mention it. I know that you already know what to do. Please do it.